Hi, this is Karen Deis, publisher of Mortgage Currency Magazine, and these are the Mortgage Rule and Regulations updates for February 10th, 2012. I have some good news, I have some more good news, and I have some even better news for you. First, the good news. There are only 8 rule changes this month. I don't know what happened, but the regulators must have been on vacation. In fact, this is the first time that I can recall that FHA and VA have had zero rule changes over a 30-day time period. And remember, if you want to share the good news with your real estate agents, we've created Facebook posts for you where you can cut and paste and post on your Facebook page. And you'll also find within the article there are tweets. There's a little tweet button. Push the button and it automatically posts to your Twitter account so you can keep your real estate agents and consumers updated on all of the good news out there. Now, there's even more good news because some of these changes I'm about to share with you are going to add loans to your pipeline. All right, let's get started with the HARP 2.0 program, which are going to be released to new servicers as of March 17th. Now remember, this program doesn't end until December 2013. And I know it's hard to believe that there's some people that have never ever heard of the HARP 2.0 program. So you have some time. You know, watch out for those loans in the future. Actually, a year-and-a-half time period to refinance the people who still may qualify for HARP but may not know about it. And if you haven't already done so, on the left-hand side of the page, there's a video tab there. There you'll find a video recording of the frequently asked questions that you asked on Facebook. And you can view it there. It's absolutely free. The really big news this time around is the USDA Refinance Pilot Program, which in my opinion, in most instances, beats HARP all to hell. In fact, first of all, there are 19 states that are going to be guinea pigs for this refinance program. But here are some of the highlights. First of all, the borrower must have a current USDA loan, and they can refinance them without having to qualify for anything. I mean, no credit report, no appraisal, no property inspection, and no ratios. The interest rate must be 1% below their current rate. Mortgage payments must be made in time on time over the last 12-month time period, and they must meet income limits, which, by the way, is another USDA announcement. They've been increased as of February 1st. Now, here's the one big limitation. On this refinance program, you can only refinance the principal balance plus the guarantee fee. You can't put in accrued interest, lender's fees, or any late charges. So you're going to have to bring some cash to closing if they're going to refinance using this program. Now this program is open for a 2-year time period, and I don't know if the rates are going to go any lower, but this will give you the opportunity to maybe refinance them over and over again because there isn't a limitation on that. And I'm sure after these 19 states are monitored that they're going to open it up to the entire U.S. There's another good news update that HUD's REO $100 down program has added 8 more states. Now, quick marketing tip here. Visit HUD's REO website, which is included in the article. Periodically, pick up those new listings and email them to your real estate agents. I'm sure they're not keeping track of some of these good deals that are out there. That way, it's an opportunity to keep in touch with your agent. You might even want to post them with a link on your Facebook page. Now, one more piece of good news is that if you work with builders and do construction loans, Fannie has a couple of updates there as well. Now, the length of time that a borrower owns a lot is no longer dependent upon the date that they purchased it. Now the value of the lot is going to be considered based on the appraisal value. A two-time construction loan closing where you close the construction loan and a permanent loan are now considered a limited cash-out refinance, and 97% loan-to-value are now considered. One more thing in the compliance department. The Equal Opportunity Credit Act realized that there was one classification people that were missing from that rule, and that's gay, lesbian, bisexual, and transgender. So, as a protected class when it comes to fair housing and discrimination, that those terms have been added to the Act. So a quick recap here. USDA has a new refinance pilot program. Is your state one of them that participates? USDA has increased the income limits on virtually every county in the United States. Did your limits increase? HUD has added 8 new states to their $100 down REO program. And if you work with builders, Fannie has updated their construction perm refinance rules. Now, use those pre-written Facebook posts, those tweets, to let your real estate agents and your builders know on all the updates. And one of the reasons to subscribe to Mortgage Currency is because getting a loan approved these days is rocket science. Thanks for listening.